This is the 10-Minute Contrarian Podcast. This is VP. We're a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 180 is brought to us by Bybit, and something very strange happened this week. I probably had a record number of people sign up for Bybit in this past week, but then almost none of them deposited anything, which was very strange. I just want to let all of you know who have signed up, who have not deposited, all the great things I talk about on this channel do not apply to you simply because you signed up. You have to do more than that, obviously. And with all the new stuff Bybit has coming down the pike, you're going to want to. They're really building out the card as well. We'll be talking a lot about that as we go forward. So go down below, click on the link in the Bybit blog down in the show notes, and click the affiliate link there and get yourself signed up. But get active as well, because with Bybit, membership has its rewards, but only if you're actively trading. It is the 10-Minute Contrarian Podcast, and as we approach December of 2024, looking back on it, it's been a really good year for us, has it not? The vast majority of what we invest in here on the podcast is in the green. Everybody's portfolios should be mostly green. And here's the real crazy part. The way we do things here, just talking about offense, we play offense and defense here on the podcast. Well, let's just talk about the offense we play. We take a bit of a venture capitalist approach to where we're looking for asymmetrical upside. So what venture capitalists do, or at least back in the tech boom, what they were known for doing is investing in, maybe 15 to 20 companies, fully understanding that if they invested in 20 companies, 19 of them were going to completely flop and go to zero and just do nothing but lose them money. But it didn't matter. As long as that one winner was your next Facebook or Uber or Salesforce, because at that point, the other 19 losses that all went to zero no longer mattered. You were still, at that point, fabulously wealthy on the one winning investment you made. And we take a very similar approach here. Oddly enough, though, we're not over here just winning 1 out of 20 of our investments. We win more than we lose here. And our winners aren't things that just go up incrementally. Our winners are things that go up a lot. How good is that? Seriously, all you have to do is take the approach we take. Do deep research into asymmetrical investments and have the patience and the staying power to wait it out. That's the formula. And this formula is too difficult for a lot of people to do emotionally and mentally and sometimes financially. Sometimes you have to liquidate to pay bills. I get that. But if you're doing things right and you're investing only money you can afford to lose, and you're okay with eating losses, sometimes big losses, then eventually, to the victor will go the spoils. This past run-up was a perfect example. I had I had a handful of very irritating people over the past year ask me, VP, do you still like Cardano? Are you sure you want to be an XRP? It seems old, and these other things seem to be the next generation, and maybe we should put our money there. Look, you don't need to be asking me these questions. I am not your advisor. If I was, I would charge a lot of money, not because I'm elite, just simply because I want to price the majority of people completely out of this so I don't have to deal with them. But no, you should know. I should be asking you, how do you feel about this thing you supposedly researched heavily and invested in? What do you think about it? Do you still believe in it? You should know. You should know these things inside and out. You should know these things better than I know these things. Yet there's people out there that still want to treat me like their financial advisor, which I am not. The answer, and I'll just go ahead and let everybody know right now, so you can maybe write this down somewhere if you ever have doubts in the future. The answer is, if my sentiment on what I invest in ever changes, I will let you know on this podcast, or maybe if I get a wild hair up my ass to write a blog. But those are the two places where any changes will go down. This happened once already this year when I got out of PancakeSwap. Told everybody. But just a nice yearly or semi-yearly reminder that this is a do-it-yourself podcast and a do-it-yourself channel. And even though these questions seem rather innocent and rather innocuous, just remember too, I still have PTSD from the early days of the channel, where I foolishly allowed people to ask questions for free, and the majority of them did nothing but take advantage of that. This is why I tell everybody, even though they do it anyway, not to ask me questions on Twitter. Because one, I am not your free help desk. Two, if people see me answering your question on Twitter, they are going to assume that I am also their free help desk as well. So apologies to all of those people who this does not apply to. I do have to say this sometimes. If you're wondering why I have not had a complete meltdown like you see a lot of YouTubers and podcasters have over the years, it's because one, I'm not prone to meltdowns, but two, I also learn from my own mistakes. But back to sunnier things here, contrarians. Let's take the things that have done really well so far this year. I mean, all of your gold and silver mining plays should be in the green. Uranium, too. Uranium got a really nice pop this year. I had mentioned back in an episode called My Friend Jeff that I was investing into the NASDAQ, into QQQ, and that has done very well for us as well. That one may not fall into the asymmetrical category, especially probably not nowadays, but just tack that one on. It's been good. And then recently in the crypto world, some of those positions that we just got done talking about that required patience and was a real test of our patience as the narratives had seemed to have turned against us for a moment, finally got what was coming to them. Now, Cardano more than tripled from where it was for the majority of 2024. Now, I didn't take any profit off of it because I took profit last time, back before I was actually doing this publicly. But you guys know that I was in Cardano at a very early stage, and you guys also know that sucker went all the way up to like $3.40 at its high. So safe to say I had already taken some profit during that time, so I didn't need to do it again personally. But if you don't follow me on Twitter or if you missed it, I did just recently take profit on XRP. And you can go all the way back to the episode I did on XRP, and you can see just how long I had been holding it, while most of the crypto world was telling me it was a dead project and or had simply just maxed out its own potential. So this isn't really me boasting because, I'm very upfront with everything I invest in here. This is just a perfect reminder to stay convicted in the things you are convicted in. And just remember, too, we are much longer term than most of these people you see commentating on social media. If we are mushy middle investors who always get wrecked, well then yeah, these people have a point. Maybe we shouldn't be in some of these investments. But that's not how we play it. And it is for that reason why, even though we take a venture capitalist approach here with our offense, with our upside, we still manage to win more than we lose, which given the upside is absolutely ridiculous. And here's what's even better, and what a lot of people can't quite wrap their heads around, is that, when we're talking about, 20 investments, let's say, you win, quote, 12 of them. That's, in a lot of people's minds, assuming that the other 8 lose, and by lose, they think it goes to zero. Well, almost nothing we invest in over here goes to zero. I'm sure somebody will remind me if I'm incorrect on this, but the last thing I can think of that really went all the way to zero or close to it, and close enough to it to where you can call it a zero, is Bondly. If you remember that, I actually did a blog post on it. It's a long time ago. It was a crypto that I went in a bit too hastily in and learned a lot from it and just wrote it off as a loss. Like I said, when you invest the way we do, you can easily write off these investments that go to zero because your winners are going to more than cancel them out. So as much as they suck, and as much as it's a hit to your ego, in the grand scheme of things, they don't matter a whole lot. But again, here's the crazy thing about what we do. Most of our losers don't actually go to zero. And that really does change the mathematical equation a lot in our favor. We don't deal with a lot of really small junior mining stocks here, so the chances of us getting destroyed there are very small. Fortunately, I have not experienced that. At least I don't think. Maybe my very early days investing I did, but I don't think I have. You remember those. And then in crypto, Apart from Bondly, and I'm sure somebody's going to remind me if I'm wrong, I don't think there's been any, rug pulls we've been a part of. Okay, edit. There were a few Web3 games that we were in, very small, minor players, and some of those did rug. But the main ones that I like, at least, are still alive and progressing, and we'll talk about those in a moment. Certainly there's a few investments out there that aren't going as well as we'd like, but just flat out, we just don't take a lot of zeros here. That's a big deal. Do you understand what that does to the overall mathematics and what that does to our overall bottom line over time? That's significant. Not only do we win more than we lose, when we win big, and when we lose, it doesn't even go to zero most of the time. Contrarians, this isn't me sitting here beating my own chest. This is me telling you that there's going to be a lot of times, actually most of the time. I don't remember if it was Buffett or Munger who said it, but they said 98% of making money is just sitting around doing nothing. So there's going to be, a lot of that in this style of investing, and there's going to be a lot of doubt during that time as you're sitting there watching other things go up, especially. But if you have that combination of due diligence and understanding, the sectors, especially the sectors of the future, and then understanding that we're always going to be too early, probably, and you're just going to need to wait it out, if you can do those things, there's a large pot of gold at the end of that rainbow. But over 11 minutes in, let's go ahead and get to the theme of episode 180. You guys have seen the title, and it's called Tax Loss Harvesting. And when you tax loss harvest, it's hard to say. That means you are writing off losses, not wins. And December is a big month for that, which is also another advantage for us, because what we can also do is take any losses we have and write them off on our taxes. Now, I've said before, I don't do a lot of stuff on taxes because, my audience is global, and it's very different depending on where you go. I would say if you're not in the United States, or even if you're in the United States, you should know about this, just go to an AI platform like ChatGPT or Gemini or someplace like that and ask them about tax laws in your country. Again, this is where people think they can ask me questions, saying, so what if I'm in Bangladesh? What do I do? The fuck should I know? Thankfully, with AI now, even if you're too lazy to do base levels of research on the classic internet, you can now go to AI and get your questions answered there. But in the United States, you are allowed to write off up to $3,000 worth of losses, and this is in total. So if you have gains, you can, if you have enough losses to write off, if you can make it go down to minus 3,000, then you can write that off on your actual taxes next year. And so a lot of people do that. Now, the problem is with us is it's been such a good year, there's not a whole lot to write off, is there? That's what the whole first part of the show is really about. But we will not be without L's on this show and in this style of investing. You're just going to have to get used to it, and you're going to have to know what to do. So if I look back at the things that I am currently down on, one of them would probably be Metaverse and Web3 gaming. But I understand the long cycle we need to take for this whole space to really get a grip and get running. And I'm fully prepared to eat shit in the meantime. I knew this was going to be a part of it. I told the Illuvium community on Discord, it's like, look, all you guys think we're going to launch and then instantly go to the moon. I'm telling you right now, we are not. We are releasing at a time where sentiment for Web3 gaming, and especially NFTs, is at an all-time low. And our rise is going to be very slow. And the majority of you man-child dipshits are not ready for this. And you're going to bail, which is fine because you're going to give the smart investors perfect opportunities to buy the token and the NFTs at very low prices. And this is exactly what has happened. Cardania is still cheap and very low prices. Most of those NFTs have dropped in value. And oddly enough, with Cornucopias, the NFTs really have not. They have either retained their value over time or have gone up. But that's fine because I am holding all the way through. My excitement for these projects has not gone anywhere. It's always been high. man, I really don't have any inclination to write anything off, even if it's just for a month and I'm going to buy it back in January. I don't want to do that. So that being said, where else do I turn? Where else am I losing and just like completely eating my dick on over here? Oh, hello, natural gas. Almost didn't see you there. Not only am I losing on natural gas, I actually averaged down into it back when I felt there was a very irrational drop in the price, and the price just kept going down. So that sucked. But over the past 12 months especially, we have seen a lot of technology in the natural gas space to where they're able to now produce it at scale all over the world. And you know what that does to supply. It makes it go way up. And so the price of natural gas and my UNG ETF went way down. Now, I don't want to deep dive too much into natural gas right now because I have my prediction episodes coming up in January. And what's good about those prediction episodes, too, is we take a deeper dive into the things we like to invest in during those episodes. So I'll just keep it pretty basic right now, but I'm still quite bullish long term on natural gas, believe it or not, because people are starting to figure out it's the one thing that can really be used across all applications. And we know that the world is going to have to be electrified much more than it is right now. And we're ready for that, and we invest in that. But there's going to be some places that are going to have less electricity than other places. And since we know energy is life, they are going to need substitutes, and people are figuring out that natural gas is that perfect substitute. You know, it is also very clean by comparison. And so there are a lot of things out there that are being refabricated to fit this narrative. And as a result, natural gas is something I absolutely want to be a part of. So what I'm going to do is I will be selling UNG in December, and I will be picking it up again 30 days later in January. So I will take the tax loss advantage there and hopefully pick it right back up at the same price, maybe even get lucky and get it cheaper 30 days from now. Now, the risk I take there is if for some reason in those 30 days the price of natural gas and the UNG ETF shoot up. You know, at that point, I'll probably still buy it. Now, I don't announce everything I do here in the stock space the way I do in the crypto space, but just know that that's going to be the plan, and that's almost certainly what's going to happen because I want in on this space. And if the price of UNG shoots up in 30 days after I sell, then that's just a hit I'm willing to take. You know, I've already got hit pretty hard on this one. You know, what's another small hit? So hopefully I can keep my UNG ETF and keep a similar amount of shares while still enjoying the benefits of tax loss harvesting, while still enjoying the benefits of knowing that our losses here are really not that frequent. You know, again, they could be, and we would still do really well here because our wins are big. So let's never get too down on the losses we take because, one, it's just part of the game. And any experienced grown-up investor is just going to have to get used to dealing with them. But all the same, there are a number of ways to where we can mitigate those losses, and tax loss harvesting is one of them. And if you can do it, you absolutely should be doing it. And in my best attempt to be transparent and practice what I preach, letting everybody know that this is the approach I will be taking this year. So just know that part of this journey into contrarian investing is not all the fun stuff. Sometimes it's the down and dirty stuff, and that's part of investing too. But the good thing is the majority of this year has been quite good, and the majority of this year has been us showing the entire world that we were not crazy, that we were just early.